bad news. Current trade conditions turning negative, down to 45 from 54 in March, and quite a big drop at that, 9 points.
Definitely so, and quite surprising at that. We typically expect poor performance in the April trade conditions survey because of the large number of public holidays. Even though the retail component of the survey may sometimes experience benefits from those holidays, the broader trade environment does not. And what we try to do this time around is factor in the seasonal behavior around this time of year to determine to what extent we could extract from the survey trend the impact of the month of April. And we find even with the seasonal adjustment, there's still a fairly dramatic decline. With the seasonal adjustment, the decline is 5 points, whereas without the seasonal adjustment, the decline is 9 points. So this is disturbing behavior for April, and it shows that the trade component of our economy is reflecting what we're seeing in the broader economy. Our BCI that was released last week tells us about the broader economy, and it also showed negative performance. And here in particular in the trade environment, you're seeing the pressures that consumers are experiencing as well, as reflected recently in credit extension numbers which had come down. We're also finding the impact of lower consumer activity and lower credit availability in the economy on the trade survey.
Well, looking at that seasonally adjusted number then of 47, it's still below the seasonally adjusted number of 49, which was recorded a year ago in April. So over the course of a year, nothing's improved, in fact, it has deteriorated.
Correct, and that's even more alarming because last year was a particularly bad year, and as compared to other data that we've seen, we generally see improvements as compared to last year, and here we're not even seeing that. So there is definitely concerns about the direction that the trade environment is taking. It doesn't seem as though this is going to be a temporary anomaly. With this level of negative impact, there's likely to be deeper seated consequences to the low level of activity we're seeing, and we need to follow that very carefully. We're unable to interpret fully this time round the true extent of the issues affecting the trade environment, and we hope to get a better insight into that in the next survey. As I said, this time round the decline was something of a surprise.
How do you marry the results of the trade conditions survey with the trade expectation survey, which is still positive at 63? The
trade expectation survey is the predictive component of the total trade survey. So it looks 6 months into the future.
So we are expecting an improvement in 6 months' time.
Quite right. However, at the risk of sounding too negative, the trade expectation survey does suffer an upward bias, a positive bias. So it would always typically be in positive territory.
Optimistic traders out here.
Absolutely. A business will not keep its doors open if it couldn't be optimistic about the future. So when one factors out the positive bias, then one finds that the trade expectation survey isn't performing as well as the numbers actually show. One would have liked to see the trade expectations index at this point heading towards 70. And it's struggling to do so. It's now currently locked into the lower 60 levels. And if you take out the positive bias that it suffers, that's actually reflective of a level that's just verging on positive, just slightly above 50. 50 being the level at which both these indices change from negative to positive.
And yet sales expectations at 73, would that be normal if with the trade expectations at 63?
Yes, the sales expectations are fairly high, but again, it's that positive bias. Businessmen have to believe that positive sales levels are approaching, especially when they're in difficult times. The positive bias actually gets stronger because that's the basis on which they keep their doors open and continue to trade. And one must bear in mind that in the mind of a business person, the types of experience we're seeing right now is many retail shop floors being fairly empty, fairly bare of customers. And in the mind of the business person, one would imagine that he's thinking about the next sale, but he's also thinking about the fact that while that shop floor is bare, he's raking up certain overhead costs. And so it's a fairly bleak circumstance that the retailer is facing right now, especially on the small and medium side. And he is looking for every indication that better times are to come, because while his shop floor is empty, he is incurring costs, which he then has to overcome once those positive times approach.
Of course, you can't look at these indices in isolation. You have to look at some of the other data coming out. And we had manufacturing numbers out yesterday showing reasonable growth in the manufacturing sector in March. We've had the PMI out for April, which was also sitting quite positive. So why do we see this activity building in the manufacturing sector, but not feeding through perhaps to the trading sector?
Well, our optimistic outlook is that it will feed into the trade sector sometime soon. But one must also bear in mind that the manufacturing data reflects overall activity, not just domestic activity.
So we're looking at exports as well here.
Absolutely.
We've done pretty well in the auto industry, I suppose.
Quite right. And if you go back to the BCI, which we chatted about last week, the BCI clearly breaks down our involvement in international markets as opposed to domestic markets. And all the domestic factors within the BCI rendered a negative return this month, and all the factors within the BCI showing overseas involvement or international trade involvement represented a positive return. So clearly the progress in the manufacturing sector has been driven by external markets, which is a great thing for the economy, provided that down the line we see those benefits return home to our domestic market.
Employment conditions also negative, falling from 47 to 45. Employment prospects at 52. Does this mean we are going to see employment starting to pick up in the sector?
The employment numbers currently have receded to a small degree. In terms of expectations, the short-term outlook, it is fairly stable in positive territory, but not dramatically so. We're just slightly above 50, 52 in April, 53 in March. We seem to be stabilizing around that level. Those are not the types of levels that you need if you want to create 500,000 jobs in a given year. And right now, the trade survey accompanied by the BCI is not giving us a very positive indication in terms of the private sector's ability to contribute to massive numbers of job creation. We hope that in the coming months that picture changes, that prognosis or outlook changes, but right now it's fairly tight within the broad economy and specifically within the trade environment.